Good morning. Today is March 12th, 2024, and it's almost coming close to the end of the earnings season. And we are going to look into certain stocks today. One was the Oracle earning we had, ORCL. Let's see, Oracle. So Oracle had a good pre-market move, pre and after market move. So we look at somewhere close. Our average pivot point was close to 112, and right now it is 128, so about 12% rise up overall, because of the cloud revenue growth, and that is really nice. We are looking at close to quarterly revenue of $12 billion and net income of $2.5 billion. Okay. And the assets balance sheet is close to $10 billion. And so we have a balance sheet on a quarterly basis about 100 billion, and then we have total liabilities, which is also high. The annual revenue we had about 100 billion, and the liabilities are high, but their cloud revenue looks to have gone up quite well. So that is why the stock has gone up. Their expansion activities that they introduced have fared very well. So that's primary reason. Now, other than that, I will see what else we can take a look. So from the earnings of yesterday, we had Oracle, we had Asana. Let's quickly take a look into Asana. So Asana is basically, it's a San Francisco-based company, and market cap about $4 billion, $15 to $26 is its annual range, and it beats the expectation of the market, but the stock went up early morning and then has come down. So as of now, I'll just let's quickly look at its financials. Quarterly revenue good, balance sheet looks decent, cash flow looks negative, and there's a recent surge in cash flow. So overall, I kind of think the stock is still good as of now, but a little bit more research I need to perform on the stock. Okay, so I'll add it to my portfolio. Watch list. March 2024. Okay. Okay, give me a second. Okay. Okay. So after Asana, we have CASY's, CASY. CASY's is It's a chain for the stores, one of the retail stores. Founded 1968. Headquarters, Iowa, 31,000 employees. Six months, the stock has done reasonably well. Stock is still looking bullish. I think because of the inflation, their profit margin has gone up. Yeah, so I think it's one of the good stock you can hold, and it pays about 0.58% dividend. So not a lot, but P ratio is also very reasonable. So I think the stock is good to hold for that reason. Okay. Now CASY is there. Then let's say MTN had an early yesterday. Whale Resorts, P ratio 37%. Average volume, okay. Market cap $8 billion. I think overall I like being a resort company. Their earnings can be up and down, but revenue has been up. Income is recent. Their expenses are a little on the higher side. The stock has gone sideways 6 months. Sideways, sideways, sideways. I'll look to be out most likely unless you want to scalp at the down end. So you can buy at lows and sell it at highs and then keep moving here. And OCUL. Ocular is Ocular is like no P ratio. I don't see average volume at 2.41 wall. That means this stock is being traded heavily. It looks like relatively newer company. It's a therapeutics company, so higher risk, higher reward. Annual earnings to their net income is negative as of today. So again, that makes it more of a company to with risk. Cash flow has gone up, so it looks like there's a positive investment to their business. Whatever they are doing, this looks interesting. The stock, as you can see, because of the cash, the company looks more more free to invest and grow. So I'm talking about close to $2 now. It's so about already we had about 93% growth on this stock. So Ocular Therapeutics is something that you should be looking further. Then Life MD. So Ocular, I would be speculative to buy at this level, let it have some dip, or maybe if it's continuing to grow the upside, then we can add more. But as of now, Ocular looks very interesting, but very speculative. Okay. And then we have ASRT. It's less than $1. I'm not going to look into that for now. Okay, so it's came down all the way from there. Short holdings, hardly any P ratio, average volume is low. It's a therapeutics company. 1995, US based, Illinois, 30 employees. So I wouldn't suggest to get into this unless you want to take high risk. Okay. Now next one is CTMX. So we had CTMX Therapeutics. Again, I'm going to leave this about $2 stock. High risk, high reward for now. Just leave this. And then one last from yesterday's earning is MYPS. MYPS. We are going to. I will just leave it for now. That's again $2.20. P ratio is not established, and dividend is there's no dividend yield. This is also Play Studios. Okay, so Play Studios is they have 758 employees, so that looks interesting. Earning and let's take their statements about quarterly, annual. Balance sheet looks good. Cash flow looks negative for now. So balance sheet is great. So their asset class is good. So as of now, I'll be interested to see how they're increasing their assets. Okay, so I like this stock overall. I'll add into my portfolio. Two zero two 403. Okay. Okay, yeah. Going back. Now this is done. Now from the morning we have ADM coals. Let's take ADM. We have 6 months ADL. Not looking. 41,000 employees. Average volume about $5.4 million. 6 months, not very good performance. Been sideways. For now, the P ratio is great actually. So for now, I think ADM NYSE based stock receive subpoenas on it's food processing and commodity. So it's a stock which has a lot of expenses. There are some lawsuits, and also for now, I'll just say to um, to to be kind of watchful there. If you are getting into the price point, looks great, but just be watchful. Okay. Now the next stock we will quickly take a look at so is ONON. ONON. Okay. NYSE base P ratio is too high. So be watchful there. 1,700 employees. And ONON is what does it do? Okay, so we'll just go through the website, see what it is. So it's related to fitness activities, road running, different running, hiking, outdoor activities, explore. For now, I'll try to be out of this stock. I mean, there are so many variables. On the service-based, subscription-based, most likely. So for now, I'll just leave it. Okay, now the next stock we are looking into is Coles. Coles pre-market as of now. Coles has been 1 year, 5 year, 55, been going sideways for a very long time. I'll just, I think the margins and all related to their CDP climate score is a negative, which is doesn't impact on the investment, but good to know that they are keeping a track of that. And dividend yield is high, so one of the reasons why the stock is underperforming because it's giving dividends. 97,000 employees. Their margins have gone down. Cash flow is negative, little bit. Quarterly cash flow has been negative. As of now, I'll just keep a watch. So Coles is a heavy stock, but price point wise, it is better. But again, I don't know about where we are close to the 52-week high, but it may break anytime. Now, Coles is done. Workhorse, WKHS. Workhorse has been sold for a very long time, and this stock is kind of we don't know what will happen to this, but 331 employees, 2007 founded, market cap $84 million. So they are at a point where they need to either raise cash or come up with some major sales or some major investor coming into it. So as of now, Workhorse is great price point, but a lot of risk. For now, Workhorse will move forward. BZ. 1 year. It's very choppy stock, but very range bound. So that is good and bad. High volatility, but and I think one of the reason I can tell you is because it is NASDAQ listed, but this is not probably a US based company, their headquarters somewhere else. As of now, I'll suggest just to be out of company like this because of their reporting structure and everything else. For now, we will add it into our speculative buys. For now, let's say 5 years. Yeah, high entropy, high implied volatility stock for now. Now, next one will be so Boss Busy and then IGT. Let's take into IGT. IGT is good stock, about 50 P ratio 52, market cap $5 billion, dividend is 3.18%, like the company overall. G-Tech, SPA, multinational gambling company that produces slot machines and other gambling technology. The company is headquartered in London with major in Rome, and so I think it's this company is stable. This one, but on a downward trajectory, so we have to see why it's going downwards. For now, not to buy. Wait and watch. Okay. HGTY, Haggerty. Okay, so Haggerty here is P ratio is high P ratio, based in Michigan. And what this company does something related to the cars, insurance for people who love cars. Okay. Okay. Related to Haggerty's Drivers Club, valuation model, subscription model. So many things here in this. There's insurance marketplace, drivers club, so valuation, entertainment, and experiences. You protect collectibles. So more likely we protect collectibles as if they were your own. Let's drive together. So on the collectibles market, very specialized market. For now, I'm out on this stock for now, unless I understand a little bit more of this. It's out of my current understanding and the time that I want to spend on this. Unless I am into one of the collectibles side by personality, yes, then I will be getting into there. Now, next one is Manu, MANU. Manchester United. No, not a stock, just avoid. Blade BLDE. Again, I don't want to put the stock also, just leave it for now. And AAWH. BLDE, 1 second, let me see. Yeah, not aviation company headquartered in New York, incorporated in Delaware. Urban air mobility platform, so high expense. As of now, this company is, let's take a look quickly. What it does, fly the future today. Okay, fly between Manhattan and JFK for 9 minutes. Okay, Manhattan in 5 minutes. Okay, so it's something related to company you want to explore. Yeah. This looks good. Air transportation coming along. So this is definitely coming. An area where you want to see where we will be getting to know on May 20, 2014, built-in company, let's say 5-year high expense, slow movement, looks to trend up. We don't know as of now. For now, this company is a watch. Not buying, not selling. Okay, and last of as of today morning is AAWH. AAWH, ASAN Wellness earnings. This is again, I don't like a primary exchange. Don't like this. Is this the AAWH? This OTC? I don't do OTC. Yeah, I don't do OTC. We will leave this stock. I don't like. Okay, I think that is pretty much today. We have in the after the close, we have Clover, we have Skin, Funware, Alberts, Energy Vault, PHX Minerals, 360 Finance, Guild Mortgage, Purple Heron. We will review them tomorrow morning, or if not possible, I'll try to cover it in tonight so that I'll have less of more of our recordings that we can bring more podcast to our viewers, and we all can learn to invest together. Thank you for watching the podcast. For any questions, you can reach out to me, to my number, or go to my website, ZestStockMirror.com. If you know me, just you can WhatsApp me, or you can go to the ZestStockMirror.com and get more information. Also, you can subscribe to our channel, which is YouTube.com and then Zest Financials. ZestStockMirror, sorry, YouTube.com, ZestStockMirror. Okay. See you tonight or tomorrow. Thank you.